This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on August 24th, 2017. Our time is 8:44 Mountain. Radio show runs every Sunday afternoon, 6:30 CHED in Edmonton. We have a podcast through iTunes. Type in The World Financial Report on Radio. All the shows are archived on Harold's website, rarecoloreddiamonds.com. Connect with Harold at 1-800-432-1022. How do you invest today so you can retire tomorrow? That's why we do this show. And Harold is there. You can give him a call at any time. He'll be happy to speak with you personally and privately. Anything discussed, confidential. He has programs in place where you can start making money immediately today. 1-800-432-1022. The website, rarecoloreddiamonds.com. In the second half of the show, we'll talk about Harold's website, hsfineauctions.com. There's an auction underway as we speak. Featured diamond of the week for the show today is a .46 carat radiant cut fancy vivid green. See it online, rarecoloreddiamonds.com. rarecoloreddiamonds.com. As we start today's show, some news out of Toronto and via the Canadian Business Channel. It was interesting. They put curbs in place in British Columbia for the housing market. It did pull back a bit. Now it seems to be on the upward climb again, which is interesting. But in Toronto, they put the curbs in, and at this point, it does seem to be working. Home sales across the GTA continue to slide in the middle of August, pushing prices into the near market territory of bear. Purchases sank 35% over the year in the first 14 days of August, according to the Toronto Real Estate Board. That marked a slight moderation from July, when full-month sales plummeted 40%. Meanwhile, new listings fell 10% year-over-year in the first half of August, according to data released on Wednesday. Now, this is the important part. The average selling price at mid-month in Toronto was $731,614, marking a 20% decline from the April peak of $920,791. So, Harold, we're starting to see a bear market in housing in Toronto. And it's interesting that in Vancouver, they did pull back for a while. Now it's picking up steam again. They may have to jump in there. But if we do get another rate rise here in Canada, as is suspected for September, that will definitely play a part in wreaking more havoc in the housing market in Toronto and Vancouver and really all across Canada.
You better believe it, Randy. Again, first of all, the real estate market is hot. They speculated, which is the worst thing that you could possibly do with your home. People should never, ever speculate, obviously, with something as important as your home. That's where most people end up building their wealth. So as this was all going on, and we knew that when the government put these restrictions on for foreign investors type of thing, that it had to bring down the market. Now, what's happening in Vancouver, if they're smart, they will realize that it's a hot market. It's not supposed to be speculative, and they shouldn't be raising interest rates. If they raise interest rates again in September, then it's going to cause issues again in the real estate market and in the debt market. But this was so obvious. I mean, I don't see how in the world they didn't see that these ramifications were going to happen as a result of raising interest rates. We had a report on our show about a month ago that just showed that the debt in Canada is the highest that it's ever been, credit card debt and personal debt. And what does the government do is go out and raise interest rates. So it's making that debt that much more difficult to carry. And then you've got the problems with the real estate, which, again, should never have happened. Now, I do believe that things will settle down in Toronto, and they will stabilize if people realize that they shouldn't be speculating in that particular market. And I would imagine that enough people ended up losing their homes over this. So if the Canadian government does continue to raise interest rates, it's just going to make the cost of a mortgage that much more expensive. It's going to cost your debt that much more expensive, and I just don't see the benefit of why they would have raised interest rates in Canada anyways. There's no inflation, and the reason that you raise interest rates is really due to inflation. Now, the reason that they were raising rates in the U.S. was primarily, to strengthen the dollar. Now, the dollar had dropped about 10% since Trump has become president. He's basically accomplished absolutely nothing. This debacle over the last few weeks with the white supremacist situation is causing problems all throughout the United States. I mean, the hate that is being generated at this particular point is very concerning. In actual fact, I just spoke to a friend of mine in Florida this morning who told me that Mar-a-Lago, which is Trump's private club, a lot of people are quitting the club, just leaving it due to this situation over the white supremacist situation, and the charities that he, headed up or belonged to are suffering because of this also. So, again, I think at this particular point, we should be very concerned about what's not only happening in Canada, but what's happening in the United States. And the fact is that as Trump, who I got to admit, I had high hopes for. I thought that he was going to be the man. I thought, as a strong businessman, that he would be able to right the ship, that we could get rid of the politician, situations, the political ones, and get into the business of running the country. But so far, nothing has been done, and he's embarrassing, and he's causing problems, and there's geopolitical situations with North Korea and everybody else at this point. So I got to say, at this time in the United States, things are extremely concerning. Things are very concerning in Canada, and Europe has never recovered whatsoever, from the problems that they've had financially. So we're looking at a very tough situation. Looking at the markets in general right now, there's very few markets that are moving outside of a range. The gold market's trading in a range, it can't break 1,300. Silver's trading within a range. Oil's trading in a range. The only market that really has shown any legs whatsoever is the Dow in the United States, and it's only because of 5 or 6 stocks. It's not that the U.S. economy is doing well. It isn't. In actual fact, most people in the United States right now are very, very concerned, and they should be, because the way that the country is being run, does not breed any confidence. So it's going to be interesting to see what's going to happen at the midway point of Trump's presidency. Again, he hasn't accomplished anything, so we're going to have to see what the situation is, but there's talk of impeachment, and there's a lot of concern within the United States, Randy. So at this particular time, again, there's very little movements in the market. Now, August is notoriously the slowest month of the year. And we're almost out of August. As we head into September, October, November, December, the latter part of the year, I do anticipate that things are going to pick up. All it's going to take is one geopolitical situation or something that he's going to do, whether it's going to be shutting down the government if he doesn't get his own way. I think, Randy, we spoke about this morning, but he made reference to the fact that he'll shut down the government if they don't give him his way of building the wall to keep out the Mexicans. So, again, at this point here, there's a lot of concern. Something is going to happen. There's no doubt that we're going to see markets blowing up, and it's going to happen within the next year. Again, at this point, the markets are very, very cautious. That's why they're trading in a range. But something is going to happen within the near future. You could almost feel it in the marketplace right now, and it's a negative type of feeling because, again, nothing is positive happening within the United States at this point. And as we discussed, earlier with Canada, I just don't see the benefit of raising interest rates at a time when the real estate market and the debt market is in such disarray that it's only going to cause, further heartache for Canadians because, again, their debt level is going to go up. It's going to cost you more to carry it, and the real estate market's in trouble, which makes most people very nervous because that's where most people have most of their wealth. So, again, at this point, Randy, the markets are in a range right now, but something is going to happen very soon that's going to make this market, and my gut feeling tells me it's going to be in the metals markets, that we're going to see the gold market start to take off again because, again, of all these geopolitical situations and the fear that's in the markets all over the world at this point. So we're going to see what happens within the next month or so with the debt situation and whether Trump does back up his word and actually shut down the government. And if that did happen, I believe all hell is going to break loose.
very hard to retire in the financial world we find ourselves in today because it's hard to make money. You see record amounts of hedge funds, supposedly the smartest guys in the room when it comes to making money, they're shutting down, and a lot of them, because it is very, very difficult. Everyone is worried about losing their retirement money again due to another financial pullback, and we'll talk about that here soon. Will anyone be able to retire? Well, if you're investing at 1% in a GIC, going to be very difficult. How do you invest today so you can retire tomorrow? Speak with Harold Siegel. He has private plans in place where you can start making money immediately. Give Harold a call, 1-800-432-1022. RareColoredDiamonds.com is the website, RareColoredDiamonds.com, the website. And on the website, we have our featured diamond of the week. It's a .46 carat radiant cut, fancy, vivid green. We'll talk about that in the second half of the show. Also, the auction that is underway. HSFineAuctions.com has an auction on right now. We'll talk about it in the second half of the program. Go there, take a look around, sign up, see the catalog, and start bidding. And Harold touched on the chaos in the United States. We mentioned it on the last program. Ray Dalio, and we mentioned Ray on the last program, one of the top hedge fund managers in the world. And he was recommending having an allocation of precious metals, gold, in your portfolio for the times that we live in. He says the United States, the most divided socially and economically since 1937. Americans are divided socially and economically in ways we have not seen since the worst days of the Depression, and as the world was heading into another global conflict. Hedge fund manager Ray Dalio said on an essay on LinkedIn. He's the head of Bridgewater Associates. He compared the current U.S. climate to 37 as Adolf Hitler rallied Germans against ahead of the World War II, and the U.S. plunged further into the economic abyss that had begun in 1929. He says, "It seems to me that we are now economically and socially divided and burdened in ways that are broadly analogous to 1937, Dalio wrote. During such times, conflicts, both internal and external, increase. Populism emerges, democracies are threatened, and wars can occur. I can't say how bad this time around will get. I'm watching how conflict is being handled as a guide, and I'm not encouraged. The missive comes as the U.S. markets appear to be hitting a wall. Political conflict in Washington has escalated, and thousands are protesting in the streets over, obviously, historic monuments and what's happening in the United States on so many levels. You're talking about illegal immigrants. You're talking about the neo-Nazis. Dalio's view on how it all turns out is not optimistic. Now, we were talking about the stock market. Ron Paul used to be a huge advocate for precious metals, used to be a congressman out of Texas. His son, Rand Paul, Ron ran for president of the United States, did not get the nomination on the Republican side. Rand Paul is his son. He's a senator out of Kentucky. Ron is a doctor, and Rand is an ophthalmologist. Rand actually did run for the nomination, but Donald Trump beat him out along with others. Now, Ron Paul saying 50% stock market plunge conceivable, but he doesn't blame U.S. President Donald Trump. Ron Paul's sell-off prediction just got more severe. The former Republican congressman from Texas believes escalating dysfunction in Washington will create even more pain for Wall Street. A 50% pullback is conceivable, he said on Futures Now. I don't believe it's 10 years off. I don't believe it's a year off. According to his calculations, it would cut the S&P 500 index in half to 1212, and the blue-chip Dow Jones Industrial Average would collapse to 10,837. Paul noted that there's a lot of chaos in Washington right now with an unpredictable president and those who are inclined to tear him apart. But if the markets take that big of a tumble, he doesn't see it as Trump's fault. It's a man-made event. It's not the fault of Donald Trump in the last week. And he goes on to say, if the markets crash tomorrow and we have a Great Depression, he didn't do it in 6 months. It took more than 6 or 10 years to cause all these problems that we're facing, he said. What's more, it would come at the expense of businesses who are counting on reforms such as tax cuts and fewer regulations in the United States. Paul, who is also known for his presidential runs, originally made his case for a somewhat more benign 25% downturn on June 29 on Futures Now on CNBC. He argued Wall Street is overestimating the strength of the economy, and the Federal Reserve kept interest rates too low for too long. He said the situation for stocks could turn ugly as soon as October. And it's interesting to note, and I really encourage you to get our free weekly newsletter. Connect with Harold, get our newsletter at rarecoloreddiamonds.com, 1-800-432-1022, because the other story is important too that we're going to mention to you. Wall Street banks warn downturn is coming. HSBC, Hong Kong Shanghai Bank Holdings PLC, Citigroup, and Morgan Stanley see mounting evidence the global markets are in the last stage of their rallies before a downturn in the business cycle. Analysts at the Wall Street behemoths cite signals, including the breakdown of long-standing relationships between stocks, bonds, and commodities, as well as investors ignoring valuation fundamentals and data. It all means stocks and credit markets are at the risk of a painful drop. Equities have become less correlated with the Forex markets, that's the money markets. Forex has become less correlated with rates, and everything has become less sensitive to oil, according to Andrew Sheets, Morgan Stanley's chief cross-asset strategist. He wrote in a note published on Tuesday, his bank's models show that assets across the world are the least correlated in almost a decade. Even after U.S. stocks joined high-yield credit in a sell-off triggered this month by U.S. President Donald Trump's political standoff with North Korea and racial violence in Virginia. But Harold, you take a look at it. Ray Dalio saying that the current environment similar to 1937, prior to Adolf Hitler getting involved in World War II. Ron Paul, 50% pullback in the stock market conceivable. And then you have big banks like HSBC, Citigroup, and JP Morgan coming out saying that they think a downturn is coming. And obviously it's a time that we really believe, be cautious, be conservative. Profit, protect the money that you have. You work so hard for that money. You go to work, and many people work 10, 12, 14, 16 hours a day trying to get by, put a little money aside. And the last thing you want is to lose that money. Profit, obviously, is important. You need to make a profit if you want to retire at some point, and you need to be in an asset where you're protected, something that's defensive. And Harold, we have about 3 minutes left here in our segment, but now is the time for people to be conservative because there are lots of financial landmines out there, and people need to be aware.
You bet. You know, the thing is, Randy, is that it takes a severe situation that happens within the banking system or the mortgage system like it did in 2008 in order for the Dow to really fall as much as it did. Back in 2008, the Dow dropped from, 14,000 to about 6,500. But we were in the midst of a collapse of the financial system. You know, very little outside of the United States will affect the market, and the market does not reflect, when I say the market, the Dow does not reflect the U.S. economy. What it does reflect is Amazon, Google, Apple, those type of stocks. You've got 5 or 6 stocks that are supporting the entire market. Now, the thing is that Americans are speculators. You know, they speculate in real estate, they speculate in stocks, and, you know, when a market is running, they're going to jump in with both feet, just like what happened in Toronto and Vancouver. When the prices were going up in real estate, people were mortgaging, they were leveraging, they were jumping into the market, not knowing what they're doing, and what the end result is going to be a financial disaster. So you never do that. You don't speculate in those type of markets. And you don't go into businesses or into situations that you don't know how they work. So, again, it would take a lot for the Dow in the U.S. to fall, but the feeling is that it is going to happen, and the reasons for it to happen are there. So, again, we're very nervous about the markets at this particular point. Is this the quiet before the storm? It's very possible. With a president like Trump right now, anything is possible, and we're starting to see the ramifications of somebody who's running the country that doesn't have the qualifications to do so.
Speak with Harold. Confusing times. Obviously, if you're trying to make money in the financial markets and are looking for guidance, geopolitically, financially, lots of questions, and Harold is there to more than happy to answer them. Give him a call, 1-800-432-1022. The call does not cost you a thing. It's free. Anything discussed, 100% confidential. The website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. And you can speak personally and privately with Harold. He will be happy to take your call, and he speaks with literally hundreds of people a month, and he'll be happy to speak with you. Our featured diamond of the week from rarecoloreddiamonds.com is a .46 carat radiant cut fancy vivid green. You can see it online at rarecoloreddiamonds.com, featured diamond of the week. rarecoloreddiamonds.com, featured diamond of the week, a .46 carat radiant cut fancy vivid green. And coming up after the break, we will talk about diamonds. We're also going to talk about the auction that is currently underway right now, hsfineauctions.com. And we have a piece of Liz Taylor's jewelry up for auction. We have many items that have already been auctioned off. New ones have been added in. We'll talk about that. But go right now, take a look at hsfineauctions.com, sign up, be a part of the auction, take a look at the catalog, and start bidding right now. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August 24th, 2017. The time is 9:09 Mountain. If you ever miss a radio show, they're archived on Harold's website, rarecoloreddiamonds.com. All the shows are there streaming for you to listen anytime at your leisure. We have a podcast. Podcasting is so popular now, and we've had a podcast for a long time. You can subscribe to it, download it on Harold's websites, and as well, I should mention, go to iTunes, type in the World Financial Report on Radio. You will find us there. hsfineauctions.com, Harold's website for auctions. There's an auction underway online right now. It's a continuous auction. We have different items that are going to be leaving soon. We'll have a final hammer come down. They will go, and new items will be added. We'll talk about that shortly. Our featured diamond of the week is a .46 carat radiant cut fancy vivid green. It is gorgeous. See the video of this, rarecoloreddiamonds.com, featured diamond of the week. And it was just about a year or so ago, May 31, 2016, the Aurora Green. Diamond sold for a record-breaking price, a green diamond, $16.8 million. The 5.03 carat Aurora Green diamond set 2 auction records for green diamonds at Christie's Hong Kong Magnificent Jewel Sale. Sold for $16.8 million. The rectangular cut fancy vivid green diamond sold for $3.3 million per carat, a record. And the price was a record. The green diamond with VS2 clarity mounted on a gold ring surrounded by circular cut pink diamonds, and we have a picture of it in our free weekly newsletter. It is gorgeous. was purchased by Hong Kong-based Chow Tai Fook Jewelry, one of the largest jewelry retailers in the world. Its price was at really one of the low end of the estimate, but it still went for a record per carat and price-wise. The diamond shattered the previous records for green diamonds, which were set earlier that month for the Ocean Dream, a 5.5 carat fancy vivid green diamond sold for $8.6 million, $1.5 million per carat. And yes, the Aurora Green still is the number one green diamond sold at auction, even a year on. This diamond is one of the greatest green diamonds on the planet. And Harold, we have a green diamond people can take a look at. It's a radiant cut, fancy, vivid green. The color on it is a beauty.
Better believe it, Randy. Fact is that vivid green diamonds are extremely rare. As you mentioned, the Aurora Green is the most famous. That's sold for $3 million a carat, and they're extremely hard to get. Now, vivid is the highest color grade that the GIA will actually give. So it's the highest saturated color, and the more saturation to a diamond, the more expensive and valuable it becomes. To get a green diamond that's vivid is extremely rare. Now, this diamond is slightly under a carat, and even though green diamonds are selling for $3 million a carat, or the Aurora Green did, that was because it was 5 carats. You don't just say because a diamond is a carat and figure it on down that the diamond is worth, just over $1 million and change. That's not the way it works. When you get a substantial diamond over 5 carats, like the Aurora Green was, it's just extremely rare. It was the largest vivid green diamond ever found. And again, if you would ever see the color of it, people always ask, because very few have ever seen a green diamond before, they ask if it looks like an emerald. It doesn't in any way. When you see a green diamond, you know that it's something special. Just like a red diamond, people will think that, well, does it look like a ruby? It doesn't. If you see a pure red diamond and hold it in your hand, you know that you have something so ridiculously rare that most people don't even know that something like this exists. So, after seeing what has happened with blue diamonds over the past 10 years, where we've literally seen vivid blue diamonds of size go from basically $200,000 a carat in 2005 all the way up to close to $5 million a carat by 2017, that just shows the rarity of these diamonds. Now, over the last few years, we have had a handful of blue diamonds that have gone up for sale. They've been extremely rare, and the prices have been records pretty well every single time. We believe that green diamonds are going to follow the path of blues. There's very few blue diamonds available for sale at all in the world today, and that's the same situation with green. In fact, as I mentioned before, most people never realize that a diamond turns green. And how does a diamond turn green? Well, basically, all diamonds are made of the same. It's compressed carbon that comes up through volcanic eruption through the Earth's surface, and that's how diamonds are formed. So the fact is that the majority of diamonds are white diamonds. However, when a mineral creeps into the ground, it could literally change the diamond from white to a different color. So in the case of green diamonds, it's uranium. If there's uranium in the ground, it could literally turn a diamond to green. Now, it could be a light green. It could be a fancy green. It could be a fancy intense, a fancy deep, or a fancy vivid. You only know that once it's really cut. But the fact is that will determine the value of that diamond, how much saturation to the color. So again, it's interesting that a simple mineral entering the ground like uranium can turn a diamond green and change the price so dramatically, because the price between a white diamond and a colored diamond, depending on the color of it and the intensity of the color, is astronomical. I mean, a white diamond could be $20,000, and the same diamond in blue could be, $2 million type of thing. So it's just an amazing thing that diamonds can turn colors and makes them so valuable and so rare, because a diamond of color, only one diamond in 100,000 is a colored diamond. And just because a diamond is colored does not mean that it's a collectible diamond. It has to meet certain requirements. Like, for example, in yellow diamonds, we find that the diamond has to be internally flawless and of a very good color. And in that case, those diamonds increase by about 15% a year. When it comes to blue diamonds, again, boron would have to enter the ground and turn a diamond blue. In the case of green diamonds, it's uranium. In the case of yellow and orange diamonds, it's nitrogen. So when you get these extremely rare diamonds, now you take a diamond like the featured diamond this week, it's under a carat, but it's still such an amazing collectible diamond because of the color of it. In fact, compare that to pink diamonds from the Argyle mine. 95% of the pink diamonds that come out of the Argyle mine are under a quarter carat. So you're talking, when they talk about pink diamonds, for example, from Argyle, they're talking about the most concentrated form of wealth on earth. You're talking about a small asset that just is worth so much money. Again, depending on the color and the saturation will determine how much that diamond will go for, and then size obviously is extremely important. When you're talking about pink diamonds from Argyle, the majority of their diamonds are under a quarter carat, as I mentioned, but they take the diamonds that are over a half a carat to a carat, and they take them on tours called the Argyle Pink Diamond Tender. So again, you're not talking about massive size, but you're talking about color and rarity. And again, in today's investment world, it's good to own an asset that, number one, does not lose its value. The fact is that when you make an investment, you're looking to, number one, make sure that the investment is solid and you're not going to lose your capital, your initial investment. And then after that, you hope to make a profit on it. So capital preservation is number one. Capital appreciation is number two. I believe rare colored diamonds gives you both of those situations to where your money is safe and stable, but then on top of that, you've got the opportunity over a longer term, like a retirement savings plan. You don't buy a diamond and sell it off in a couple of years. You're not going to make any money. You're not going to lose your money, but you're not going to make money. The fact is that you want to hold on to a diamond for a longer period of time, just like you would a retirement savings plan. In a lot of cases, my clients have invested in diamonds primarily because of the currency. The fact is that when we started buying diamonds many years ago, the Canadian and American dollar were basically even. Now the Canadian American dollar is about 20 to 25% difference. So you can see just on the currency alone that the diamond has actually, even if it didn't move up in value, you still picked up 20-25% on the currency alone. But we do believe that over the long term, the diamonds are one of the best investments you can make. Now, what we had to do was build a secondary market to resell them, because companies like Christie's and Sotheby's, they tend to sell the world's most substantial diamonds. When we looked at diamonds that were in the lower medium price range, like 20, 50, 100, 200,000, there's a huge market for that. What we had to do is develop that market, which takes time, and then we have to have an avenue in which to sell them. So we built H. Siegel Fine Auctions. We're the only company of our kind in this business that has that. Now, we have to build that business, and that's exactly what we're doing now. We have two auction businesses. One is a live auction that normally lasts about an hour, and then our new auction business that's been going on for about 2 months now is more of a silent auction. It'll be ongoing. And when an item either sells or doesn't sell in a certain period of time, it'll be taken down and replaced with another. So far in the last 2 months, we've sold 6 out of 11 items who were up on the auction block, and that's during the 2 slowest months of the year, which are July and August. We do anticipate that that's going to pick up tremendously as we get into the latter part of the year. On top of that, not only do we offer diamonds, but we offer collectible coins and other amazing pieces. We'll be bringing jewelry to you. We'll be bringing watches to you. We'll be bringing at sometimes cars and Ferraris and things like that to you. So we anticipate building this business. On top of that, we are planning for probably the month of October to do a live auction on white diamond goods. We have mined our own diamonds, and we've been able to get them at phenomenal prices, and we anticipate holding an auction for the industry and for private clients where you'll be able to buy diamonds as much as 50% under wrap. So we're very, very excited about that. All with this, looking to build and build and build our auction business. So as we get into the time that we're going to sell our pink diamonds, for example, the Argyle mine is going to close in 2020, which is about 2.5 years from now. There will be no more pink diamonds. They produce 95% of the pink diamonds in the world. We feel that pink diamonds right now are one of the best investments you could make. You need to hold on to them until the mine closes, give it 2 or 3 years for the diamonds to run out, and then we're going to put these diamonds up for auction, and we believe we're going to do very well for our clients. Now, we only make money on these diamonds when our clients make money, because we get 10% of the profit. So if you don't do well, we don't do well. So our motivation has always been for our clients to do well, much more than anything else. All we want is to be able to, for our investments, to do well for our clients. And in today's world, that's not the easiest thing to do. Markets are going sideways. People are very concerned about, the economies in Canada, the U.S., and all over the world. The U.S. has got a president that is not doing anything and causing massive problems. They're raising interest rates in Canada at a time when the debt levels are the highest that they've ever. Nothing seems to make a lot of sense right now. Speculating with your home in Toronto and Vancouver is probably one of the biggest mistakes that people could have made, but you get caught up in the euphoria of making money, and it's right there in front of you, and unfortunately, the general public tends to get involved in these things at the wrong time, at the last minute, when it's already done. That's not the way that we're looking to do things. We're looking for our clients to invest in strong assets that are safe and long-term, that will make money over the longer term, like a retirement savings plan is supposed to be, but hasn't done for the last decade. So, again, at this point, we are building our auction business. It's H. Siegel Fine Auctions, hsfineauctions.com. It's the only business of its type, and we are enjoying the initial success of the auction, but we anticipate building and building and building that business. In fact, that's one of my major focuses for the next several years, is to build our auction business, which will be the exit strategy for all of our clients. The thing is, a lot of us like to collect, whether it's sports cards or coins or stamps or art or cars or gold or diamonds, whatever. We just need a media in which to sell it, and that's what we're building. In actual fact, our coins at auction have done tremendously well, and that's another area that we'll be concentrating on. We're going to be minting our own coins that will be our own legal tender. So we've got some things coming up, and even though the markets are all over the place, we're in the alternative asset business. We're not in stocks. We're not trading leverage. We're not doing anything risky. What we're doing is keeping our eye on the prize, basically, and we're keeping conservative. We're not speculating in these markets. So I think we've got some amazing things coming up. We've got private programs that our clients invest in that are private to our company, that are outside of the stock and the paper market system, that you could literally be our partners and invest with us on. So, again, those are available to our Canadian clients. Please give me a call. I'll explain them to you. It would certainly give you an area to do better than you're doing at this particular time. Some of our investments are paying as much as 25% a year. So give me a call if that would be of interest to you. In the meantime, we've got amazing opportunities coming up in alternative assets. We're rebuilding and building strong our auction business, so please pay attention to that. In a time when things are confusing, volatile, risky, and a lot of people are just on edge because they don't know which way to turn. The fact is that I believe that our companies are going to do better going into these difficult times, because we're not in the paper asset market. We're in real assets that you can hold yourself. We offer gold right now in only kilo form, but at bid prices, no commissions, no spreads, no nothing. Gold's going to run. There's no doubt about it. We're going to see a run in gold again, and we're able to sell you gold at basically the lowest price that you could ever buy it at. If you bought gold and it went up 1 penny, you'd be in profits with us, where you would not be able to buy that through anybody else. So that's the way things are going at this point, Randy. We're excited about the diamond market, the coin market, our auction market. We believe that alternative assets are the way to go at a time when things are very confusing and very, very risky and extremely volatile.
Diamonds, jewelry, an investment you can wear for 30 years and then sell. What else can you do that with? Not a stock certificate or bond certificate, a house, a car. Well, you can with a watch, I guess, but a handbag. But truthfully, diamonds and jewelry, an investment that you can wear or pass down from generation to generation, and then at some point, if you choose, it can be sold for a profit. Featured Diamond of the Week from rarecoloreddiamonds.com is a .46 carat, radiant cut, fancy, vivid green. See it online, rarecoloreddiamonds.com, rarecoloreddiamonds.com. And Harold talked about hard assets. We'll give you a quick update before we get to some more info on diamonds. It was an interesting week in Pebble Beach, California. They had a vintage car auction there. And we touched on it on one of our earlier shows in the month. There was an Aston Martin that they thought would go for $20 million. It went for $22.6 million. A glossy turquoise 1956 Aston Martin with a racing legacy, $22.5 million. And the closest to that was about a year prior, a 1955 Jaguar D-Type sold for $21.8 million. I know that Harold loves watches, and so do I. Now, here we'll keep an eye on this. It's coming up. This is going to be very interesting. A Holy Grail watch sets the stage for a high-stakes battle. Paul Newman, a legendary actor, beloved as a Canadian for being in Slapshot, one of the great characters of all time he played in that movie. How would you like to own Paul Newman's Rolex? It's coming up for auction in October. And among vintage collectors, certain timepieces are known as the Holy Grail of watches. This is one of them. And we will keep track of it, and we will find out exactly what it goes for. But as I mentioned earlier, what else when it comes to diamonds and jewelry, an investment that you can wear for 30 years or pass down from generation to generation, what else can you do that with? And there was a quote from Joseph Lipton, CEO of Secured Worldwide. Diamonds are a portable alternative store of savings and wealth that are being increasingly utilized for diversification. And in a new and uncertain world where surprises will continue to catch us off guard, portability should absolutely be understood as diversification. The ability to easily move savings and wealth around is not a feature of precious metals, real estate, or most collectibles, but it is for diamonds. They are arguably the densest and most portable form of savings and wealth in existence. Real estate is fixed, and $1 million worth of gold weighs about 10 kilos, as much as a large car tire, but a handful of collection-quality diamonds can be worth many millions of dollars and fit in a pocket. We've talked about it in the past, that term. You could have Rolls Royces in the palm of your hand, meaning you could have diamonds that are worth what multiple Rolls Royces would be worth in the palm of your hand in the form of diamonds. And Richard Russell, who passed away a few years ago, was quoted as saying, another high-class area of transportable, tangible assets, diamonds. And he said you can transport 10 million worth of diamonds in the cuff of your trousers. Obviously, we believe everything should be legal and above board and everything should be reported. But if we get into a scenario where Lord knows what is upon us, it's good to know that you have a portable asset that is private real estate in your pocket. And Harold, we like to tell the story of Mr. Hancock, Warren Hancock, a Montana rancher. In 1980, the highest auction price paid for a diamond was $127,000 a carat for a 7.27 carat pink diamond. That record was shattered in 1987 by the first high-quality red to be sold at auction. It was a close to 1 carat. It was a .95 carat Hancock red. It sold for $926,000 a carat. The Hancock Red was sold by the heirs of the American owner, Warren Hancock, a Montana rancher and diamond collector. Mr. Hancock had bought all his diamonds at retail prices from his local jeweler, and he had reportedly paid about $13,500 for the .95 carat red diamond in 1956. He had a collection of diamonds. He loved diamonds. And it was fair to say that that was one of the greatest gemstone investments of the century. And then we have in 1960, the Princey pink diamond sold for $70,000 at Sotheby's in London. The buyer was Van Cleefs and Arpels, which threw a party which was attended by, I guess basically we could say a queen of Baroda. And she had her 14-year-old son. His nickname was Princey. And Princey, that diamond, that's how it got its name, from that young boy. So here we are, 1960, $70,000. In April 2013, Princey sold for $39.3 million at Christie's in New York City. And then we have the famous story of little Shirley Temple, 1940. Her dad bought her a blue diamond, right around $7,200. It was sold last year for around $25 million. And Harold, you know, that's the excitement of this market. We have about 3 minutes left in our segment here, but that's the excitement of the diamond market. What else can you have and own and pass down from generation to generation, wear, show off, and then ultimately sell if you choose? That's an outstanding investment.
You bet. And those are great examples, Randy. Again, the returns on those diamonds were obviously massive. Now, not every diamond does that, obviously. Everybody knows that. But the fact is that you never know what you have, and the longer you hold on to it, the longer you keep it into your family, handed down from generation to generation, these pieces can take on a life of their own. You know, recently we bought some coins. Back in 2004, I paid $250 for a 2-ounce Tiffany coin, and that coin today is selling for $6,500. From $250 to $6,500 within the last 13 years, that's an astronomical return. The only type of returns that you can ever see in your lifetime is by holding on to a high-quality asset for a long period of time, and that's why we introduce diamonds and coins to our clients as long-term, strong investments. And again, pay attention to our auctions, because that's ultimately where you'll be able to sell your diamonds and your collectibles sometime down the road.
Our featured diamond of the week is just a stunning green diamond, and we want you to go take a look at it at rarecoloreddiamonds.com. Featured diamond of the week. It's a .46 carat radiant cut, fancy vivid green. See it online, rarecoloreddiamonds.com. Featured diamond of the week. And to give you an idea of the rarity of the diamonds that we're talking about here today, in the 244-year history of auctions, only 18 pink diamonds of more than 10 carats, 2 grams, have come up for sale. This is nature's art, the Picassos of the world that are put out by Mother Nature, and they are the rarest of the rare. Harold, thank you for your knowledge and another great show.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
How do you invest today so you can retire tomorrow? And that's the question that we should all be asking ourselves. We mention it on many shows because that is a powerful question. And what does that mean to you? Are you going to be in a position where you retire tomorrow? I hope you are, but if you're not in that position, speak with Harold, 1-800-432-1022. Go to rarecoloreddiamonds.com. Take a look at the auction at hsfineauctions.com. That's it, another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.